Picture this: Bitcoin, the digital gold of our time, plummeting from a staggering $70,000. It's a scenario that sends shockwaves through the world of cryptocurrency, a world where fortunes are made and lost in the blink of an eye. The unthinkable has happened. The titan of the crypto world has stumbled, fallen from its lofty perch. It's a jarring sight, a reality that defies belief. In the wake of this seismic drop, the crypto world is left in a state of shock, questioning the stability of the digital currency they had once deemed unshakable. A sense of intrigue clouds the air, whispers of worry and speculation fill the void left by the crashing Bitcoin. Questions abound, theories are spun, but the truth remains elusive. What could have caused such a dramatic fall from grace? Buckle up as we journey through the events leading up to this unprecedented drop. Before we delve into the fall, let's appreciate the climb. The journey to $70,000 was no small feat. Bitcoin, the world's first digital currency, started from humble beginnings. It was a vision of a decentralized currency, free from governmental control. But it was more than just a vision, it was a revolution. And like all revolutions, it faced resistance, skepticism, and even hostility. But it persevered. The climb to $70,000 was marked by a series of pivotal moments. For one, there was an increase in institutional investment. Major corporations, hedge funds, and even pension funds started to pour money into Bitcoin. These institutional investors saw the potential in Bitcoin's decentralized nature and its potential as a hedge against inflation. They saw it as a new asset class, a digital gold if you will. Then there was wider acceptance. Bitcoin started to move from the fringes of the internet to the mainstream. Major online retailers started accepting Bitcoin, even some brick-and-mortar stores began to accept it. Bitcoin ATMs started appearing in major cities around the world. People started talking about Bitcoin at dinner tables, in coffee shops, and at office water coolers. It was no longer a niche internet phenomenon, it was becoming a household name. Lastly, there was economic uncertainty. In times of economic instability, investors look for alternative investment options. They look for assets that can hold their value, or even appreciate when traditional markets are struggling. Bitcoin, with its limited supply and decentralized nature, seemed like a perfect fit. It was seen as a safe haven, a digital fortress against the stormy seas of economic uncertainty. And so, Bitcoin climbed. It climbed past $10,000, past $20,000, past $50,000, and then it hit $70,000. Bitcoin was on top of the world, standing tall and proud, but as we know, what goes up must come down. In the world of crypto, volatility is the name of the game, and there were signs that the Bitcoin bubble might burst. Let's wind back the clock a bit. The year was 2024, and Bitcoin was soaring to heights never seen before, pushing past the $70,000 mark. But as the saying goes, what goes up must come down, and there were early indications that trouble was brewing in paradise. Firstly, the market speculation was reaching fever pitch. The air was thick with dreams of instant wealth and financial freedom. Everyone from your next-door neighbor to Wall Street investors was talking about Bitcoin. The hype was real, but so was the danger. History has shown us that when the speculation exceeds the substance, the market is ripe for a correction. Next, financial experts began to voice their concerns. They warned about a potential bubble, drawing parallels with the dot-com bubble of the late 90s and the housing bubble of 2008. The rapid, almost exponential growth of Bitcoin was eerily similar. They cautioned that when the hype fades and the bubble bursts, a lot of people could lose a lot of money. Finally, there were the regulatory concerns. Governments around the world were increasingly worried about the potential risks associated with Bitcoin and other cryptocurrencies. They feared the potential for money laundering, fraud, and the destabilization of traditional financial systems. Regulatory bodies started to take notice and discuss potential measures to control the situation. In hindsight, these signs were all red flags waving in the wind, warning of the storm that was about to hit. But in the moment, with Bitcoin's value skyrocketing and everyone seemingly making money, it was easy to ignore the signs and get swept up in the excitement. The warning signs were there, but few could predict what would come next. And then, the unthinkable happened. Bitcoin started to fall. It was a typical day in the world of cryptocurrency, but the air was thick with anticipation. The market had been enjoying a whirlwind ride, with Bitcoin leading the charge at a staggering $70,000. But as the day wore on, a slight unease began to creep in. The first signs were subtle. A minor dip, a slight fluctuation. The kind of movement that would usually be brushed off as a mere blip in the grand scheme of things. But as the hours rolled by, that blip began to grow into something much more significant. Bitcoin started to plummet. The descent was swift and relentless. As if in a free fall, the price of Bitcoin dropped, tearing away from its lofty heights with a velocity that left the market reeling. The sense of panic began to grow, spreading through the crypto community like wildfire. The chat rooms once filled with buoyant chatter were now awash with fear and uncertainty. Investors watched in disbelief as their digital gold began to crumble. The market was in chaos. The once mighty Bitcoin, the beacon of the crypto world, was now tumbling down, its value melting away before everyone's eyes. The sense of invincibility that once surrounded Bitcoin was shattered, replaced by a growing dread. Cryptocurrency exchanges were inundated with frantic sell orders, transforming the once bustling marketplaces into frenzied scenes of desperation. The dream of riding the Bitcoin wave to unimaginable wealth was fast turning into a nightmare for many. The fall of Bitcoin was not just a financial event, it was an emotional roller coaster. The euphoria of the climb gave way to the despair of the fall. The sense of loss was palpable. As Bitcoin fell, it took with it the hopes and dreams of countless investors. The day drew to a close, leaving behind a trail of devastation. The crypto world had been shaken to its core, and the echoes of the fall would be felt for a long time to come. As Bitcoin fell, so did the hearts of countless investors worldwide. In the aftermath of the drop, the crypto world was left reeling. A shockwave had been sent through the market, its echoes reverberating off every corner of the digital realm. The once shining star of Bitcoin, having climbed to the dizzying height of $70,000, had plummeted. The descent was swift, its impact felt far and wide. The ripples of this cataclysmic event were not confined to Bitcoin alone. Other cryptocurrencies, those who had been basking in the reflected glory of Bitcoin's ascent, were also caught in the downpour. Ethereum, Ripple, Litecoin, none were spared. Their values too tumbled, caught in the gravitational pull of Bitcoin's fall. And then, there were the investors. Those who had ridden the wave of Bitcoin's rise, their optimism fueled by each new peak it reached, now found themselves in uncharted waters. Some were quick to jump ship, their confidence shattered by the sudden turn of events. Others held on, their faith in the potential of cryptocurrency unshaken. But all were united in their shock. The sentiment in the crypto market had shifted. The exhilaration of the climb had been replaced by a sobering reality. A reality that reminded everyone involved of the volatility of this new frontier. The euphoria of the past months had been punctured, replaced with a newfound caution. This was no ordinary market correction. This was a stark reminder of the risks involved in cryptocurrency investment. The drop served as a wake-up call, a moment of reckoning. It was a harsh reminder of the reality of the crypto market, its potential for great rewards, but also its capacity for equally great losses. In the face of such uncertainty, one thing remained clear. This was not the end of the story for Bitcoin or for cryptocurrency. It was merely a chapter, albeit a dramatic one, in the ongoing saga of this new and exciting form of currency. The drop was a harsh reminder of the volatility and risk inherent in the crypto market. In the wake of the drop, there are lessons to be learned. It's in these moments of financial turbulence that we can extract valuable insights and principles to guide us in the future. The fall of Bitcoin from $70,000, while shocking, offers us a unique classroom. Firstly, the importance of diversification cannot be overstated. When we put all our eggs in one basket, we expose ourselves to unnecessary risk. The Bitcoin drop showed us that even the most promising investments can experience dramatic downturns. Diversification, spreading your investments across a variety of assets, can help mitigate such risks. It's not about avoiding losses entirely, but minimizing them and creating a more stable financial portfolio. Next, the dangers of speculation. Cryptocurrencies, with their volatile nature, can be a breeding ground for speculation. The climb to $70,000 was, in part, fueled by speculative investing. People heard stories of overnight millionaires and wanted a piece of the action. But speculation is a double-edged sword. It can drive prices up rapidly, but it can also lead to significant drops when the sentiment changes. Investing should be based on research and a clear understanding of the asset, not just hopes for quick profits. Finally, the need for regulatory clarity. The cryptocurrency market is still relatively new and the rules are still being written. This uncertainty can lead to instability. The Bitcoin drop highlighted how sensitive the market is to potential regulatory changes. Clear, fair regulations can provide a stable framework for cryptocurrencies to operate within, reducing the risk of such dramatic drops in the future. As we move forward, these lessons will shape the future of the crypto market. By learning from the past, we can build a stronger, more resilient market. One where the highs are not so high that they lead to dangerous crashes, but where steady, sustainable growth is the norm. Remember, investing is not a sprint, but a marathon. And in this long race, the tortoise often beats the hare. As we move forward, these lessons will shape the future of the crypto market. Despite the drop, the future of Bitcoin remains bright. Just as the sun rises after the darkest night, Bitcoin has the potential to bounce back from its recent downturn. This digital currency's resilience is what sets it apart in a world of fleeting trends and ephemeral fads. It's not just a question of if Bitcoin will recover, but when. Bitcoin's history is a testament to its ability to rise from the ashes. From its creation in 2009 to its peak in 2021, it has weathered numerous crashes and come out stronger each time. Bitcoin's inherent volatility is part of its charm, a roller coaster ride that has the potential for high returns. But Bitcoin's future goes beyond its price. It's about its role in the digital age. In an era where our lives are increasingly online, digital currencies like Bitcoin are becoming more relevant. Bitcoin is not just a currency, but a technology, a protocol, a revolutionary way of transferring value over the internet. It's the vanguard of a digital revolution, paving the way for a future where finance is decentralized, transparent, and accessible to all. Moreover, Bitcoin's potential role in the future of finance cannot be ignored. Central banks around the world are exploring digital currencies, inspired by the success of Bitcoin. It's pushing the boundaries of what we understand as money, and challenging the traditional banking system. Even in the face of adversity, Bitcoin continues to inspire innovation. It's a catalyst for change, a beacon of financial sovereignty. Its influence extends far beyond its market value, permeating various sectors from finance to technology, from policymaking to social justice. Yes, Bitcoin has stumbled, but it's far from defeated. It's a story of resilience, of an idea that refuses to die. It's a story of a currency that is pushing the boundaries of traditional finance and paving the way for a digital future. Bitcoin may have fallen, but it's far from out. This is just another chapter in the ongoing saga of the world's most famous cryptocurrency. In the world of cryptocurrency, dramatic swings are part of the landscape. In the thrilling saga of Bitcoin, the rise to $70,000 was nothing short of a spectacle. Fueled by an intricate web of factors, from global economic trends to the actions of individual investors, this climb was a testament to Bitcoin's potential for growth. The allure of digital gold, the promise of decentralization, and a surge of institutional adoption all played their part, catapulting Bitcoin to dizzying heights. But the euphoria was short-lived. The first signs of trouble emerged, subtle yet undeniable. The market was overheating, and the bubble was stretching thin. The fall began, slow at first, then gathering pace, transforming into a headlong plunge that left the crypto world reeling. $70,000 to near oblivion, the drop was a stark reminder of the volatility inherent in the crypto space. But every fall carries with it the seeds of renewal. The aftermath of the drop was not merely a period of mourning, but a time for reflection and learning. It was a stark reminder of the need for prudent investment strategies and the importance of risk management. It brought to light the inherent risks of speculation and the dangers of FOMO, the fear of missing out. As we look to the future, the potential of Bitcoin remains as tantalizing as ever. Despite the dramatic drop, the fundamental principles that underpin Bitcoin, decentralization, transparency, and immutability, remain intact. Its potential as a hedge against inflation, a vehicle for financial inclusion, and a catalyst for technological innovation, remains undiminished. In the end, the roller coaster ride that is Bitcoin serves as a stark reminder of the nature of the crypto world. It's a world of high risks and high rewards, of dramatic highs and heart-stopping lows. As we move forward, the lessons learned from this saga will undoubtedly shape our approach to Bitcoin and the wider world of cryptocurrency. One thing's for sure, in the roller coaster world of Bitcoin, the only thing you can expect is the unexpected.